what's happening with the Utah market. Bottom line is this, with the sudden economic stop and many states shutting down, the fact is we are in a recession right now, Q2 of 2020. If that's shocking news to you, I am very, very sorry. Our intent is not to shock you, but I'm guessing you're probably already aware that that's what's going down in Q2. Now, we've seen that on the showing side. This graph shows how showings have been affected between last year and this year. And we have seen a big change in the amount of requests. This is for listings for sale. The amount of physical showings has gone down, but the number of listings for sale has actually not gone down extensively. And like I said, we'll get this all out to you, but this graph shows the number of under contract residential listings. The black line represents 2020 and the gold line represents 2019. We have more properties under contract over the last week this year than we did last year. So as Steve mentioned earlier, deals are still happening. People are still looking to buy properties. However, we are seeing more flexibility on the seller side. So if you are looking to invest this year, this should definitely be something to consider. You may be able to get some more closing costs than you did last year. Instead of having 12 offers on a property, there may be 1 or 2 parties rather than 12. With the interest rates being what they are, it is still a very favorable time to be looking to purchase. And so there are absolutely opportunities in this market that we wanted you to be aware of. Now, there's a lot of, oh yeah, go ahead.
You care if I just add something here? So one of the concerns, the stock market has declined, but the stock market is coming back. The financial conditions of the country are still solid. And so once the COVID virus goes away, we think all of that will change. And the reason we think it, in Utah, for example, I had a fellow sell his business and he says, I've got $2 or $3 million to invest. Can you buy some real estate with it? And so they like still buying, and there's opportunities. What Brad is saying is that rather than paying full price, there might be some discounts that might be available. If you want to sell a property, those are the things that you're going to have to deal with. But the thing that is really stopping showings and so forth is just the fact that we're all at home and we're supposed to stay there. But the market fundamentals are still very strong.
Great, thank you. We pulled some data comparing last year, the first half of March, to this year. Now, up through about mid-March, things were really looking about the same. The second half of March, what we've seen is a number of people have temporarily taken their listings off the market. So say you were thinking of listing April 1st, or maybe you listed March 10th, and then all of this happened, you may have decided to pull your property off the market temporarily. We are seeing more of that happening, but we are still entering the busiest season of the year for sales as well as rentals, which means the numbers are still there. A lot of the traffic is just more online. I'm going to skip through some of this, and we'll get all of this out to you all as owners, so you'll have a full copy of the PowerPoint. But a big change that's happened is our unemployment as a nation has skyrocketed, in the last few weeks. And this is what we're hearing about in the news. But the reason why we included this graphic is, even though unemployment has dramatically increased, just because unemployment is rising, it has actually not been a direct indicator that home sales and that home values and everything that way are going to directly tank and plummet. And we want to make sure that that distinction is there, because there have been different periods of time over the last 20 years, 30 years, where unemployment has risen, but home sales have actually increased as well. So we mainly want to show that to you to help you know that even though there's a lot of doom and gloom out there, there's a lot of positive things that are still happening and can come from this type of situation. On April 1st, a number of chief economists from around the country shared their opinions on what they anticipate the second half of the year of 2020 to be. Goldman Sachs, JP Morgan, Morgan Stanley were all surveyed within there. All of them, as predicted, stated that Q2 is going to be a steep decline. We're seeing that. Overall, Q2 is still going to look ugly. But if we can have successful social distancing, and if the number of infections as well as deaths can start to flatten on that curve, then the fundamentals of the economy on the housing side, as well as the economy on a whole, look to make a recovery that should be pretty quick. Now, will it be back to exactly where it was before by the end of the year? Some economists are saying yes, some are saying no. And so, you know, we are not the national economists on the matter, but we do follow a lot of what is being discussed on a national level. And overall outlook for 2020 is still positive. What they've referred it to or referenced is, imagine in the movie Rocky, when he's facing the Russian, because that's my favorite one. Rocky gets punched and falls down, and he gets, you know, you think he's going to lose all these times, but he keeps getting up. We are in a scenario right now where COVID, or the Russian in this case, and I have nothing against Russia, so please don't interpret that, but we are getting knocked down as a market and as an industry and as an economy, but the fundamentals, the training, everything that way is still in place. And so we feel very positive and hopeful about the future. This was recently done by 50 different leaders from mortgage industry, title, real estate companies, everything that way. And they said, how long do you think it would take for your business to get back to things as usual if COVID-19 were to end? And 90% of the respondents said 1 to 3 months. So we are not anticipating a 2 to 4 year tanking of the economy from this. Now, depending on how long it goes, that could alter, but what we're seeing, we don't anticipate that locally or on a national level. Let me just go back to here, to our discussion screen. As a company, our goal